Hey guys, Mike here. So another interesting day in the market leading us into the holiday weekend. In case you don't watch Saturday's video, which will be out tomorrow, I do want to say happy holidays to everybody. Again, there will be a video coming out tomorrow to answer all your questions as usual. And then I'll take Sunday and Monday off because the market is closed on Monday. And I will be back Tuesday. Now, it's pretty interesting what you're seeing in the market for sure. Been pretty volatile days over the last few, but we're going to get into a sector that is starting to, it's been on fire, it's starting to hit some very interesting levels. Another area that just can't get out of its way no matter what you try to do to it, even though I actually agree with some reforms that are actually passed today, but it just crushed a lot of stocks around the world and everything. And then what's really causing, some of this euphoria, right? I mean, when you look at this, consumer sentiment came out today, and you can see it just blast off, right? Huge increase right here of what people are expecting. You saw the AAII come out as well, and you can see what do they think is going to happen 6 months from now to the stock market? 53% bullish. It increased again. Good thing is the bears somewhat increased. People in the middle are kind of finally picking sides, as you can see. And then you look at the fear and greed index, 78%, which is extreme greed. This one tracks how many stocks are in an uptrend and above their 6-month EMA, and you can see getting up in that area where you're like, not very good. But again, it can stay up in this area for quite a while depending on the amount of euphoria piling into the stock market. And then everybody knows the CNN Fear and Greed Index. That one as well went to extreme greed. It's kind of been hovering between greed and extreme greed. But again, you see the different metrics. This one measures, I think almost every single one of them almost, are in extreme greed at this point in time. Again, they can stay up here for a while. You can see them in the 90s and stuff. So just kind of keep that in mind. Now, what is, of course, pushing all this up is, of course, we have seasonality, but also you have what? Behind the scenes, here's liquidity coming from the Fed, going into the regional banks, right? They're still increasing how much money they're bringing out, which is kind of crazy. I thought this would decrease. Instead, once they had that big drop off, it's just steadily increased. They're still taking money, right? I showed you the active manager index yesterday, how much exposure they're having. Again, this can go way up to 103, 104 usually is where you really see it peak out at, so that can continue to go higher. What else you got? Going into a re-election year, you can see normally January is definitely usually bullish, and then mid-February, a lot of times you have a pullback, but what people are calling for this time is to get bullish, and then probably maybe late Feb, early March have a nice pullback. So if that continues, you can still see stocks continue to melt up. And the reason why is pretty simple. And guys, before we continue, please hit that thumbs up button. I really appreciate it when you guys do that for me. It helps people find the video, which a lot of new people have been. And if you like the content, think about subscribing. I appreciate all your support. And it's simply because you just have so many stocks that are just hammers. Somebody said in the comments yesterday, about stocks. What do you mean stocks are way up? They're way down. And yes, because we literally got to live through a dot-com bubble where stocks, like this, see that big peak where you just crashed 90%. And so even though you've seen 100, 200% moves in a stock, a lot of them are still down 80%. I mean, which is nuts, right? Which is why you're seeing, big money or hedge funds roll into these kind of stocks and everything because they can get more bang for their buck, right? And so that's what's happening. And you're seeing the Mag 7, they're hanging in there. Some of them like Tesla getting rotated into Meta, the ones that aren't at all-time highs yet, right? But then you got your Microsofts, your Apples who just set all-time new highs, kind of just stagnant, just sitting there down a little bit, trading sideways, okay? And so, again, I'm expecting a lot of volatility for sure. But the big thing is to watch the S&P, see if it hits that all-time high. That is key levels. Tomorrow we'll talk about what a blow-off top actually is, so you know what to look for. Now, what else we always looking for, right? Is this rotation still expanding? And the answer is over the last 5 days, you actually see the SPY outdoing the equal weighted ETF for it, RSP, just by a little bit, which of course I think it has to do with more of NVIDIA and these other Mag 7 stocks have been buying up. But when you look out at the month, you can still see there, RSP is almost doubled what the SPY has been able to do because all these other stocks are getting bought up. We look at QQEW, and we'll pull up QQQ, and you're going to see something very similar here, okay? And we can see, they're still rotating in. Yeah, absolutely, they're rotating in, as you can see right there. And still, when you look a month out, the QQEW has handily outperformed the QQQ. And we know a lot of these stocks we're talking about. The financials have made a big recovery. Biotech, which we're going to talk about, fintech, you name it. been moving up since the interest rates have been falling, especially real estate stocks, right? And when you look at IWM, what we were waiting on? We're waiting on that 50 fib retracement. Again, that comes from the top down to all-time bottom right there, or actually the bottom of this crash, excuse me. And you can see it almost touched it perfectly today before it pulled back, right? That's going to be a level. I'm going to be stunned if we don't pull back at least to that trend line. I'd be really shocked if we didn't, because usually that 50 fib retracement, that's a heavy level to try to get through in the first attempt. And so it could shock, maybe they'll shock me and push it on up, but I can definitely see a pullback on that one, and it would be very healthy. I've talked about this before. If it gets above it though, once it breaks through, you can see that big volume gap right there on the side. Yeah, this can move pretty quickly to that golden pocket area, just because how quickly it rose and how quickly it crashed down, right? There's just not a lot there, so it tends to cut through these volume gaps like a hot knife through butter. I've showed you on countless number of stocks where this has happened, and so definitely pay attention to that. Look them on the daily. Again, you got some consolidation down in this area around 197, which of course equals around the July high right there, which is a key level. So if it did pull back, that would be a nice bounce spot right there for it. Another thing to watch out for is if the 50 crosses the 200. This may take obviously a couple weeks, but that 50 crosses 200, you can look back on the last couple of times this has happened, and that's when you really got a big move up. So if you get a decent pullback, see what happened right there? All of a sudden you get that nice pop right there. You saw it right there. Saw the same thing right here when the 50 crossed the 200. It's like a big spike up, rocket fuel for it to move. And so those are very short, quick moves right there. And I'd be wondering if I put a volume profile on that. I bet you there was some kind of volume gap there on top of it to equal that as well. And so again, one sector that everybody's paying a lot of attention to is going to be biotech. It was the leader today. Again, fintech was number 2. So those two sectors right there tend to be extremely hot right now. You do have biotech has been running like crazy. Some of them are running into some interesting spots here, because you can see like PacBio. This thing, good Lord, up 73% in 50 days. But what's it running into? The 200 moving average. Like a lot of these stocks are running into those 200 moving averages, and that's usually a tough one to get through. And again, you can see, this thing was once a $53 stock. And so even after this major run, it's still down 81%. That's the kind of stuff I'm talking about here. And then when you go over to something like XBI, which is the S&P Biotech ETF, you can see what's it running to, the fourth touch of that descending trend line now. If it gets above it, you can see it's going to move pretty fast. I think that's what you're seeing, is these are stocks that are highly affected by yields, right? That's the ones you're seeing move like this. And so, yeah, it can definitely move up pretty quick if it can break above that. But again, run into resistance. ARKG is another one people talk about. It hadn't even reached this trend line yet, but it's another one. Once it breaks above, 38, it's going to move to 45 pretty quickly. And that leads me to K-Web, which I talked about yesterday. I said, watch out for this maybe to break out. But then, of course, what happens? Chinese government steps in and stomps it down, right? Big gap down 10% pre-market day, staging a little bit of a comeback. What happened is the Chinese government, this is why people don't invest in Chinese stocks, right? That's why I've been saying for a long time, is there's really nothing wrong with the companies. It has to do with the freaking government. So they step in and say, put restrictions on video games and what they can offer, and trying to encourage kids to actually stay on there longer, which I actually agree with wholeheartedly. But of course, do you think the market likes that? Absolutely not, right? And so that's why you saw the gaming stocks sell off immediately in pre-market around the world. Now, one gaming stock that showed resilience was actually Roblox. It was down 3% in pre-market, up 5% at one point in time, I believe it was. And you can see there's that all-time high anchor VWAP, which has been an absolute Chinese wall. This thing has been rejected multiple times. It just consolidating below it, finally broke above it today. And you can zoom out on this and see the destruction of this chart. This thing's just sitting in a stage 1, right? Just trying to break out into a stage 2. Finally broke above that trend line. Now it's trying to break above the all-time anchor VWAP and close above it. But you can see if it can get above that, man, this thing's going to go to 60 fast, because it's got that gap above right there. The fair value gap's going to suck it up, which will probably get rejected right there, which it should. That's usually what happens. But yeah, it gets in that volume gap, it's going to move. So watch out for that one. Now, as far as economic data, Monday obviously we're closed for Christmas. Then you got Dallas Fed manufacturing data on Tuesday, so nothing big. Wednesday, a lot of manufacturing and service data coming out of Richmond and Dallas Fed as well. And again, the market doesn't seem to care about any of that stuff right now for some odd reason, but it's a euphoric rally right now. based on these rate cuts. Then you'll have your jobless data on Thursday, pending home sales, a bunch of oil data coming out. Nothing in the afternoon should affect anything. And then Friday, you'll have Chicago PMI. So very light week when it comes to data. So nothing that should really, truly affect the market. I mean, one day, maybe manufacturing data will either get better or the market actually start caring about it. But you do have services data coming out of there. So that's something to watch because we are 70% services. Again, we're still looking for when bad news is actually, bad news for the market. Actually, I should say when bad news for the economy is bad news for the market. I guess that's what we should say as well. Because again, all these rate cuts, they're going to tell us the soft landing narrative, which, I mean, that's what they want to say. But if the Fed is putting in rate cuts, it's just because they probably see something coming down the road and stuff. So just kind of keep that in mind. But again, that's a ways down. I wouldn't even bother yourself with that now. Okay, it's like people worry about recessions. Can you stop it? Nope. Don't worry about it then. Keep doing your thing, living your life, and enjoying it, okay? So anyway, like I said, if I don't see you tomorrow, I hope you guys have a great holidays. I know I plan on having it. And I'll see you, for those who do watch Saturday's video, tomorrow. For those who don't, I'll see you Tuesday. So have a great weekend and happy holidays, guys.